fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may or may not have been missing. And whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have a different show for you, where typically I have a lineup of segments, which today we have as well. But because of real events, which we'll talk about in a moment here, I am taking Thursday's episode, or Thursday's segment that I was going to do a whole separate stream on, and cramming into this one, so we're going to have a super show today. Nice, everyone. So we're going to have two special segments today. So we're going to do our normal live trading and market analysis through the open here. I kind of talk you guys through what we're seeing, especially talk about yesterday. And then we have two special segments. One, the special on war and how it affects the stock market. Now, this was a great segment that I had planned out for today. And as the market closed after I announced the shows yesterday, we learned there's a ceasefire. So a little less prevalent now. However, we'll still talk about it. That way you guys know if there are any other clashes or anything like that that does come up. You at least have the information, know what to look for when it pertains to wars or any sort of conflict. The second special segment we're going to do is a segment on how to trade a news-driven stock market. A lot of people, especially newer traders, when there's heightened times of volatility, or when we see the market is ultra sensitive to news, ultra sensitive to things that are said, tweets, financial data, whatever it may be. There's a specific way you want to learn how to trade a news-driven stock market, and even yesterday was a prime example of this, and this is why it's great to shove this segment into today, because yesterday we actually had a really solid example of how you can use news in real time to trade that stock market, to take those advantages if you are that kind of person, or understanding the risk in a heavier news-driven stock environment, because some of you are riskier traders, obviously, and some of you are long-term investors and may not care as much. So there's a difference with, depending on your trading style and what your goals are, that certain things may be more applicable than not. So That's the second segment we have for you a little bit later today. So we'll do our normal thing. We'll look around the market. Since I'm not going live on Thursday, I might still do a surprise stream randomly, so stay tuned. But since I'm not doing a stream on Thursday, we'll go through a whole week of catalysts like I like to do with you guys for my first stream of the week, kind of talk about what to look forward to going through the week. We'll take a peek at the market, and by then it'll probably be market open. So 9:21 right now, so we have a few minutes prior to the market open here. So let's look at our docket for any kind of news coming down the pike this week. Right now, we've got Fed Hammock speaking, and then we got Powell testifying at 10. Watch that, very important. Anytime Powell opens his mouth, it's going to affect the market more than likely because he's just like Trump. He could say something, and that is a potential, forward-looking statement that could affect things going into the future. At the same time, as Powell is scheduled, I should say, to speak or testify, which nothing may happen since it's a testification. At the same time, we have consumer confidence at 10. That will obviously affect the market. Any type of financial data like that, especially where we are right now with where inflation is or where the price of gold is, where everything is, any sort of inkling on if inflation could cool or get even hotter, that is very, very sensitive right now. So you're going to want to watch 10 o'clock very, very closely. Good morning to you too. I don't want to ever pronounce your name because I feel horrible. So if you want to tell me how to pronounce your name phonetically, I will know how to pronounce your name going forward. I don't want to butcher it. And I don't want to disrespect you. So you know who you are because you type good morning in the chat, put a little sun smiley face. So good morning, I see you. But if you phonetically spell your name, I want to give you the respect of saying your name correctly. Anyway, getting back into the news here. We have Williams speaking at 12:30, so another Fed speaker, so you're going to want to watch that. 2-year note, nothing there. And then Collins at 2 o'clock. And then you have Barr at market close, but that's less important. So catalyst time, things you want to watch for today, 10 o'clock, 10 o'clock, 12:30, and 2 o'clock, the big times of the day where we could see a little bit, or I should say periods of possible higher volatility. Looking forward into tomorrow. Trump will be at a NATO conference all day tomorrow, so anything could happen there. We do have new home sales at 10 a.m. and Powell testifying again tomorrow at 10 a.m. So again, more very important data. New home sale data, obviously very important, kind of gives the idea of how, along with consumer spending that we're going to see today, how strong the consumer is, right? If people are looking to buy houses specifically, which is a very, very expensive purchase, and if home sales we see tick lower and lower and lower, that could be a sign of some weakening in consumers in general. We have the 5-year note tomorrow at 1 o'clock. Outside of that, pretty cool day tomorrow, unless Trump comes out and says something during that NATO conference, or Powell says something during his, again, the word I want to use is testification, but I don't know if that's a word, but testimony. There we go, testimony. On the 26th, which is Thursday, you have jobless claims and you have GDP quarter over quarter, both before pre-market. So Wednesday, tomorrow, be mindful of that if you're carrying an overnight position, because jobless claims and GDP quarter over quarter obviously can affect things, but not as much as like obviously your yearly GDP. Outside of that, a few more Fed speakers on Thursday, and then rolling into the end of the week on Friday. Core PCE on Friday, consumer spending month over month on Friday, and my favorite, Michigan sentiment, all on Friday. So Friday should be an interesting one. So we will roll with the punches. It seems we have a kind of a news-heavy week overall. No worries, I completely understand. It's pronounced Negum. Okay, cool. Good morning, Negum. Thank you for saying good morning. All right, cool. So that's our Catalyst Watch for the day. Sorry, I should say for the week. Let's take a peek at the market right now. So currently we're sitting up a little bit here in pre-market, about 4 points up from the close yesterday, 604.64 right now on the SPY. At open, you might see me quiet down just for a moment. I do have a swing position on that I swung overnight with runners for 5:30 QQQ calls. Right now, these are going to be up pretty nicely. If we open up here, Q's right now sitting at 537. So right now I'm about $7 in the money. Here's the call that I took, the Q 530 calls. Those expired today though, so you'll see me for members at Discord. Man, I'm stuttering this morning. We have a community called Exclusive Trading over our Discord. All the links are in my bio and everything. You want to check that out. You get all of our trade ideas. It's myself, Exclusive Trading, and our coworker Grumps. Brilliant minds. I'm very proud to be working with them. Great people. If you want to learn how to trade properly, come check us out. Links are in my bio. There's a cheap plug. But this 530 call is something I'm going to be watching on at open to make sure I can take some profit here. As we have a nice move up in the open, especially on the Q specifically, up about 1% right now. So that's pretty solid. IWM in line with SPY, up about 0.7% here. So looking like a pretty bullish open day. I do want to talk about yesterday's price action. Because I think there's a very good lesson there. I actually walked our members in our community through very specifically on yesterday's price action and what to trade there specifically as it pertained to volatility and how SPY looked throughout the day, even with the news. But I'm going to save that for our how to trade a news-driven stock market segment later on. So make sure you stay tuned to that. We'll probably do that around 10 o'clock. So if you have to hop out, come back, whatever, you're definitely not going to want to miss that. Going into the open here, volatility down as well, pretty solid, about 8% here. Nvidia's up pretty good at 145.59. Apple is, again, a little heat here right before the open, but we bounced. Look at this level I've been talking about. If you've been watching the streams now for probably a month, I've been saying how important this 195.83 level is for the bulls to defend. And they defended it through and through, and now Apple's trying to get a bounce again, tapping that 50 MA in this area here. So you're going to want to see some power come through to break this, and hopefully if you're a bull on Apple, hopefully get some level of a reversal here and continuation to the upside. Still pushing up higher. Again, this is a name I do want to short, but the time is not right yet. It has been consistent. I'm not stepping in front of a steamroller here. We will let it go and see when the opportunity presents itself, but it is not yet. Google bucking the trend here, actually more bearish than the other names that we just spoke about on our Mag 6, as I like to call them. Currently moving up in the pre-market though, so it's nice to see. We'll see how this plays out a little bit later. Amazon, a little hesitant here. Now up in the pre-market though, about 2%. So a nice move up in the pre-market. That gets you back into this 212, this 218, that little higher area conversation. So you're going to want to watch and see if we can get over that 218.40, that near-term localized high, for a continued push to the upside, probably around 225, 226-ish on Amazon, if we can break that localized high. And Tesla, crazy candle here, still sub that 360. And you guys know how I feel about that. That 360 to 380 area is going to be a slog if you're a bull on Tesla. Obviously, you got in down here, you're all good. But anywhere else, a little risky. I'd be very careful on Tesla still. Obviously, day trading is a different story than you're trading longer term, but short-term trade, I would be very careful if you are a new long in this range here. Between 360 and 380 is going to be a hard spot for Tesla to break. Obviously, moving up with some of that robo-taxi news and other fun stuff that's going on with Tesla pretty frequently. All right, guys, we have 1 minute until the open, and I like to ask you twice a stream. I'm going to ask you once now. If you could do me a favor right before the market opens, whether you're listening on your phone, your tablet, your computer, whatever it may be, if you're on X, YouTube, or Instagram, do me a quick favor, wherever you are, drop a like on the stream, follow me, subscribe, whatever you can do. Again, I love to put out these streams for you guys, totally free of charge, not asking for anything at all. So if you do find value in what you're seeing here on the program, please support me in the smallest way and drop a like, a retweet, a follow, whatever you can do. That lets me know that you guys are appreciating the content. I will continue and be happy to continue putting it out for you, but please interact in some way. Drop a comment, say hi, I'll talk to you. I've got the stream up here, I can see what you're writing. But some level of interaction really helps me greatly. I don't want anything else from you besides clicking a button or two. So thank you very much. We've got 10 seconds until the market open, so let's watch things unfold here. As I said before, I'm going to more than likely trim some of these 530 calls right out the gate here. So I might be quiet just for a moment here. All right, those calls are opening up at $6, 689, 697. I got in on these calls at 162. So I'm going to trim some out here. Fantastic. 330% gain. Sorry if you hear me typing, I'm just sending the alert to our members in our Discord community. Fantastic play, very happy there. And now I am pretty comfy. Fix that. 1 second, guys. Boom, boom, boom. Wonderful. Big play. Very happy about that. Very, very, very happy. All right. Anyway, let's get back into the market now that I've sent that alert out. Those calls are now over 7. I got in on these at 167 yesterday. Now it's going for $7. Very, very happy with that. Looking at the market right now, here's the Qs. Let's take a peek at the SPY. That's 605.02. Ooh, I want to go back to this real quick. If you've been watching the program, you heard me mention this before. Going to the monthly chart on SPY. Remember the red SAR on the month? Remember we talked about this? That number is 605.95. On the month, if we break that, especially if we close the month above 605.95 on SPY, that is going to trigger at least, and go back and check me, you want to fact check me, at least a 70-point push on the SPY. At least. So, if we do break 605.95, I will be opening a monster long with time. So you could do that any which way, spreads, directional calls, whatever you like. That's up to you. But statistically, and these are monthly candles, so look at the chart here, these are months, so there would be a lot of time. If we do break 605.95 on the SPY, that is going to be a point in time where you're going to want to not be short, if anything, in general. Obviously, there's individual names, but we're just speaking in general on the market. You do not want to be short. In fact, I'll put a line on my chart here, and we'll come back and look at it later. 605.95. Put that line on your chart right now. Make it something obvious. I'm making it red. That's our monthly SAR. If we break that monthly SAR, statistically, there's at least a 70-point markup on the market. Now, I didn't get the actual number because I've got too many lines on this chart. So let's actually just do a rough, here I can do it with a trend line. Let's do a rough, I can't even see. So this is the last time that monthly SAR broke from the break until, or to the peak, was a 50% markup. 204 points on the SPY. Okay? And if we go to where the SAR broke to the downside, that's still a 37% gain, or 150 points, 147 points on the SPY. The last monthly SAR break. We'll do one more just to see, right? SAR break before that on the month, remember? From the break to the peak, 150 points on the SPY, or 48%. Almost 50% gain. From where the SAR broke to the downside, so if you want to wait until the green SAR broke to exit, still a 33% markup, or 103 points on the SPY. That is the last two recent monthly breaks of the SAR. Ooh, don't do that. That was the last 3 monthly breaks of the SAR on the SPY. Sorry, the last 2. We'll do one more just for kicks, because this is a smaller one I see here. So let's see what this one is. So from peak, okay, so I might be wrong. This one's only 50 points. Still a 20% markup. And then going to where it broke to the downside, 14 points, or a 6% markup. So I stand corrected on that 1 point there. That was the one I must have missed. But all the other ones have been at least 70 points. Now I'm curious. We're going to do one more. Going from the break to the peak, 85 points, or 47% on the SPY. Going to where it broke to the downside, 74 74 points, or 41%. Needless to say, very, very strong probability of getting a hard move to the upside, if not anything else. So you're going to want to watch that. Now, with that being said, today, overnight, we moved up pretty nicely here. I'm going to want to see what happens here in a minute or two. It's 9:35, so we're only 5 minutes into the open. Volume is pretty solid here. I'm really excited to talk about yesterday. For those of you that haven't or did trade yesterday, saw what was going on. IW, I'm a little weak here. I do want to pop over to my sectors here momentarily. I am kind of watching the Qs, so I might trim another quarter here. Yeah, I'm going to trim a quarter out on these, if you're in the Discord, just so you know. 363% gain. 363. What a great trade. You gotta love it. You gotta love it. Sorry guys, just updating. You know what I'm doing right now? I'm updating my trade logs. And if you don't keep a trade log, you're only cheating yourself. Should always keep a log of what you're doing. Always, always, always. All right, anyway. Q's pushing here. We're more than likely going to push a little higher. I'm just de-risking because this is now a 0 day. So I'm not, especially while streaming, I do not want to get caught with my pants down here. Watch this 605.02. So your two key levels in SPY today. That's 605.02 and that's 605.95. This is a key LOI, so you should see some level of resistance here. But breaking through could lead to that SAR break as early as today, which would be phenomenal to see. Now, let's pop over to our sectors and see how the market's opening up on our sectors here. An interesting note, first thing my eye catches is that energy is down by about 1%, and consumer staples are also down. Utilities flat. So remember, the top three on my chart here that I show you, or the top three on the watch list here, these are the names that money tends to flow more defensively when there are fears, when there's nervousness in the market, anything like that. This is where money flows to be more defensive. And you can see right now in real time, this is predominantly down, while tech, your predominant growth sector, is up over 1% today, which is big on the XOK. Very, very big. Real estate, the only other red eye on our sectors here. Materials up pretty good, 0.4. Industrials up about 0.4. Healthcare muted, about 0.2. Financials up nice, 1.2%. Actually, about leading the pack, tied with tech. So you're seeing that's also, there's an argument both ways here. But when I see tech and finance both move at the same time, that shows to me more risk on behavior in general. There's an argument there where sometimes they can deviate, but when I see them move together, the market tends to feel more comfortable, more safe, more stable when we're seeing growth behavior take off and when we're seeing financials do pretty good, which today they're doing fantastic. Consumer discretionary is up about 1%. That's pretty solid. And comm services also a little bit more defensively typically, but still up about 0.8. So overall, really pretty bullish day to start the day here. Let's look at IWM. Our small caps are the only thing that's really bucking the trend here. So I'd like to see a little bit more strength come through the IWM. Now, right now you're sitting around this 213.14 area. You're basically, so if we zoomed out here, this is a 1 minute chart, so it's very quick. But we're sitting basically in this consolidation point, I guess you could say, where there's a lot of price action here on the daily chart. So 213.97, 213.14, and 212.13. There's a lot of liquidity here, so there's going to be a lot of movement here. So seeing how we react to this range is going to be pretty important today. Breaking that 213.97 is going to be a decent move here. You got about another point above before you tap that 0.618 retracement there from all-time highs to current lows. So IWM is set up for a push higher, but it is literally in the middle of this range because you have a point of resistance up here and a point of support down here, and we're basically sitting on that midpoint. I would argue that it would lean more bullish. However, just to be fair, we did basically gap up today after a pretty bullish close, all things considered, especially how yesterday looked. If you don't know this, last Friday was also OPEX. OPEX is when options expire, monthly options expire. The preceding 2 days of the market, so yesterday and today, we tend to see how repositioning is going into the next month's OPEX, which is July. Which is third week in July. If you don't know this, OPEX is every third Friday of every month. We tend to see that repositioning take place yesterday and today. So based off price action and based off volume, we can kind of get an idea of which way the market is leaning, right? Yesterday's daily candle on the SPY is pretty solid. You had a wick come down, right? So we opened down here, we came down, so price got pushed down lower. We pushed through open price and closed higher. On top of that, we engulfed the prior day's candle. The only thing that would have made that better is if we did on a little bit more volume. We didn't, but pretty solid nevertheless. Also on today, our daily candle broke the SAR. We gapped up through the SAR and broke the SAR on the daily. So that's why there's a pretty solid chance we break that monthly SAR on SPY as well. Your MACD is also curling up here on the daily, so it showed that we had some period of a cool down or consolidation. Despite all the war and drama, we had some level of consolidation on higher volume, really making a base here. to prepare for another leg higher, at least in my opinion. There's a lot of people out there that think the market is very bearish right now. I would tend to disagree, and I think the price action and the volume would agree with me, regardless of the news. We have now broken that 605.02, so you're going to want to see a back test here if you are considering a long position, getting a back test before going long. It can just melt right through it, of course. And we do have data, 10 o'clock, consumer confidence, and we have Powell testifying at 10 o'clock as well. Typically, I would like to take a call off of a bounce on this LOI. However, because we have data pretty close right now, and we also gapped up, I'm going to go ahead and assume, I didn't look yet, I'm going to go ahead and assume this IV is inflated. Let's see. Ooh, I'm completely wrong. I'm actually shocked. IV is actually, I dare say, normal. At the money, IV right now on the SPY for 0 days is 18%. Typically, that's fairly normal. I'm actually pretty surprised. So that's a pretty good sign that people are feeling calmer in general. I'm actually surprised. I'm very surprised. I just assumed that we would have higher IV on this open, and we really haven't. Wow. I'm not mad about that at all. So there's a lot of things I'm looking at here that lean more bullish in general. NVIDIA, big push right now, up about 2% on the day and really starting to get going here. Watch 149.77 if you're a bull on NVIDIA here. Broke the daily SAR as well. NVIDIA is starting to look like kind of it could be a beast here. Breaking that 149.77 puts you in all-time high conversations once again. The SMH also is in a period where it could mark up. Looking at semiconductor, SMH is a semiconductor ETF. NVIDIA could make a brand new all-time high very soon. I'm speaking very bullishly, and I hate doing that, whether I speak more bullishly or more bearishly, because people tend to just throw money at the market when I say things one way or the other, and I don't want you to think that way. So please take everything with a grain of salt. Please make calculated decisions. But with that being said, how NVIDIA is sitting right now, it would not shock me to see this thing break new all-time highs very soon. In fact, I even said about the SPY on our morning call for our community over exclusive trading that I was very confident that we would see a SPY all-time high, a new all-time high in July if today's daily candle closes anything remotely like yesterday. So if we see a green close, good volume, etc., and basically protecting this gap, I'm very, very confident we will see a new all-time high maybe even pre-July, but because we're not really that far away. We're 5 points away. But very, very, very soon on the market. IWM showing some resiliency here, starting to push to the upside. NVIDIA is a monster right now. 2% looking great. Apple is just in the corner eating glue. The red-haired stepchild of the Mag 7, it seems. Actually, I could argue that was Google. Google is lagging comparatively. Microsoft, brand new all-time high today. That's why I said you don't want to step in front of a steamroller to try to pick up a penny. Yeah, Google is actually the laggard, I should say. Amazon, decent move here as well. Tesla, red. Tesla, pretty red. Look at this daily. Back tested that 345 and 72 cent LOI. Notice how you're seeing those candles there. Seeing some bulls try to defend here. Dare I take a Tesla long today? I'm feeling pretty good about the market today. These are not the cheapest. I don't like Tesla sub 360 in general, but I do like a day trade. I'm gonna look at the 360s for Tesla, and I might take a little baby day trade here. Around $4 right now. All right, I am long Tesla 360s at 409 average. So I'm looking for this POC to break here. We defended the LOI. We break the POC. Your MACD's curling up. RSI is a little burnt out, but I don't really care about that. Looking for 348.81 is a trigger. Breaking that, we should push back to the upside here. Get a decent move here. So I have a 409 entry on these. Currently trading 435. So we'll see if we get a little bit of a push here. I like it just because the whole market's leaning more bullish. It had a markdown, so it's a laggard, so that's what I don't like. Obviously, if there's strength, you want to play the strength a lot of the times. But bouncing off of a key level here, if it can break through this POC, could get a nice reversal here and get back in that like mid 350 conversation on the day. At that point, these contracts were approximately 450, 470-ish, so get a decent 18-20% gain if we revisit that price, so something to keep an eye on there. So we'll keep an eye on this and pop back to it in a little bit. Ooh, look at Red Robin. Yum. 542. Nice little bounce back after coming down pretty hard. Love to see that for all my Red Robin lovers out there. Looking pretty solid. All right, back to Tesla. We'll just keep an eye on this because it's a live trade, and then we'll roll into our next segment, and then get you guys going with the super show. All right, so I'm targeting about anything north of 450 premium for a first trim. Ideally looking for like 470-ish would be great, but anything north of 450, again, obviously depends on how quickly we move, a bunch of other factors. So I'm more concerned about the price action on the chart rather than the price of the contract. That just tends to be how I like to trade. The pre-market high on this is 357, so if there is a sudden bullishness push, now I'm bearish on the daily sub 360. It's a very hard level for Tesla to crack. But if you can get some heat here, I could get a nice, I don't want to say risk-free position, but a lower risk position here on Tesla. All right, keep an eye here. We might take a trim here soon. Got about 10% here. I'd like to see if we break the SAR here on the first tap, and I might trim some out. All right, we're over my 450 here. There we go. A little bit more. All right, I'm trimming some here for 11. It's 11% there. On Tesla, tapping that red SAR right here. If we just power through this, it could be a sweet reversal. We're basically this is exactly where I wanted to see it tap. Beautiful. I'm going to trim it again here. This is the trigger point, so you always want to take profits at trigger, and I'll explain in a moment. That's 15% gain. Okay, so when you're at a trigger point, that's a level in which it's a key level for bulls that need to break through, or a level of resistance to push to the upside, and bears are going to look to defend. So depending on your risk to reward, you always want to trim whatever you identify as your trigger, because it could fail, right? But breaking through that, you tend to get a continued push if there's good volume. And that was a really solid candle with solid volume here. It looks good. So clean 15% here. Basically, we hit the premium that I wanted. I said around 450 to 480-ish. We're at 470 right now, so you definitely have your time here to take a trim. Don't bag hold anything by any means. For the sake of the show, if we break this 480, 485 area and we get another push here, I'll probably just go run or slap a stop loss on, and I can move on with the show, and then you guys can watch risk-free and maybe make some money in the background, which is, hey, I don't think you can ask for much more than that, right? All right, look to trim here right around now. See if we get another continuation candle here. Nice volume on that last candle. All right, I'm going to trim out more here. That's 17%. And then I'm going to put a stop loss at break even here. And then we'll come back. Ta-da! How we do? One's in the chat. You like that trade? Nice and quick. Saw the opportunity, took advantage of it. Saw what I was looking for. How do we feel? You guys like that? Yes, no? I know there's a delay, so I'll wait like a minute or two to actually hear what you guys say. But do you guys like that kind of trade? Now keep in mind, we do have data here in 10 minutes. So definitely put a stop loss on. Tesla can be very volatile. And you definitely want to go runner size. If you can't afford runners, this is where you would want to get out completely. Take the win, move on. You don't want to leave the extra, all the gains on the table. If you got in around $4, you're leaving $80 on the table, right? So take the gains and move on if your count's not large enough to handle that. If you can handle runners, stop loss at break even, you can move on with your day. Because it could have a nice move to the upside here. I'm playing a very, very, very short-term trade here, and I also acknowledge the daily risk on Tesla being sub that 360 is a little bit more bearish on Tesla. So I'm acknowledging the daily risk, taking profit on the short-term opportunity at the same time. Many ways you can, slice a watermelon? Different ways you can slice it. You're also right here at the top of this the midpoint. This VWAP. So you're right at VWAP or underneath VWAP. I don't personally care about VWAP, but everyone else has it on their chart. Like I said before, that's something you want to be mindful of, that even if you use it or you don't use it, other people use it. And as a result, people build strategies around that. So you want to be very mindful of that. Hatchet says, one stream is about a minute delayed. Yeah, I'm sorry. I try to, so I know obviously if I'm taking a live trade, I'm going to talk it out in the future for those of you that watch. I will always try to talk it out in advance. And if you're in our Discord, you get this real time. So within seconds, it's very fast. So that way you have better opportunity. But I try to talk things out in advance. So if I do take a live trade, you guys know exactly what I'm looking for, and you can make your own educated decisions. Because ultimately, the point of this show is for me to provide you guys as much information as possible for you to make your own decisions that work for you. It's not for you to follow me and do what I say or copy me or whatever. It's for you to become your own person, develop your own strategies, and take what I say and morph it into your own thing, because that's what trading's really about. You all find your own little niche, right? And that's why, especially since the stream is delayed, I will tell you in advance what I'm looking for, so that way you can at least make the correct decision that fits you, and walk you through in real time. And that way you kind of watch it as it happens. So, and as you're seeing, we're rejecting VWAP here, sitting around that POC. Anyway, I've got to stop on. I'm going to move on and pretend it didn't happen now. So we're going to go on to the next segment. And after the segment, if we come back and I have a fat wad of cash, great. And if I don't, nothing lost, nothing gained, right? So it's all good. What I'll do, though, is I'll add it to the top of my Atomcash little, I have a separate segment for the show, so, or separate watch list for the show. So I'll keep it here while we talk. But anyway, here, I'll do a quick poll. What do you guys think? I was originally going to do, so we have two segments. We have war and the effects on the stock market, and then we have how to trade a news-driven stock market. One's in the chat if you want to do the war and effects on the stock market first, or two's in the chat if you want to do a news-driven stock market first. So I'll give you guys a minute because I know there's a delay. I personally believe the war one would make more sense to do the effects of the war on the stock market first and then move into a news-driven stock market, because it would at least give you a setup on, well, now there was no war, or at least no war for now. It would at least give you more of a setup of how it could be applicable, how to trade a news-driven stock market, knowing how war can affect the stock market, kind of piece those things together almost chronologically. But if you guys disagree and you think learning how to trade a news-driven, that might have been loud. Learning how to trade a news-driven stock market first, then learn the effects of war on the stock market, we can do that. So I will give a second here for you guys to drop your feelings in the chat. A 1 if you want to do the war segment first, and a 2 if you'd like to do the news-driven segment first. Negum says 1. Here, while we're waiting for your guys' input, we'll pop back to the market here. SPY coming down. Unfortunately, could not hold above that 605.02 LOI. QQQ basically back to open. Hatchet says 1. Orca says 2 afterwards, so I make sure I make it. Fair enough. Ooh, new lows here on IWM. Do not love that. VIX pretty low. 1790 on the VIX. Not bad. Nvidia still being a bull here. Very strong. Apple just sucking eggs. It is in the corner eating glue and picking its nose. Horrible, horrible, horrible. That 50 MA on Apple, if you don't have the 50 MA on the daily, it cannot crack this thing. It will one day, but the last few times it's interacted with the specifically the 50 MA on the daily, it just has the worst time trying to get over that. Microsoft getting a little bit of pullback. Somehow Google unfazed by the little bit of bearishness here. Amazon completely unfazed. And Tesla still green on my trade. We're still holding up. We will see. All right, so overall, the opinion is that we do the war-driven segment first. So we will. So like I said, I'm going to keep the contract up here so you guys can watch in real time, or at least on a delay. if this goes sub 409, then I'm out. So that way you just know. So I have a stop loss to break even. If it goes up, fantastic. Alrighty, let me get my docket up here. I believe I prepared 10 bullet points. Let me see. 1, 2, 3, 4, 5. I'm kind of upset because I took time to sit down and write out like things to pay attention to or how wars affected the market. And then literally as I was typing it up, I put out the tweet yesterday saying, hey, we're going to do a stream. Here's the days we're doing the stream. Here's the subjects like I like to do with you guys. And then I kid you not, almost like within whatever it was, an hour, I can go back and look, the ceasefire. And I'm like, oh, come on, you ruined my content, damn it. All right, let me record this just in case anyone here is not here. That makes sense. If anyone misses it, or if you guys want to rewatch it. Okay. All right, so war and the stock market have been synonymous for the longest period of time. And you may be wondering, how can I navigate conflicts and war as it pertains to the stock market? And thankfully for you, I have conducted 10 different ways on how the stock market has historically affected, how war has historically affected the stock market in the past. So right now, we technically have a ceasefire, and this is filmed, this is recorded off a live stream during a Israel and Iranian conflict, and now there's no conflict, or at least there's a ceasefire, so this may be a little less applicable, but still applicable for the past and for the future. So let's talk about the 10 bullet points. Number 1 is your initial shock. So when we see inklings of war or conflict, the market often drops. Now, history will typically show that the market will react negatively to surprise attacks and war declarations. And the main thing is, you might hear me say this a few times in this message or this segment here, but the market fears the unknown. Whenever there's something that is unknown, we don't know what could happen, that is fearful. The market tends to pull back because things are uncertain. There is some sort of fear in the market. They're scared, right? That will cause a pullback in the market a lot of the times. A great example, actually, and I have a few examples listed throughout these 10 points here, is the day after the Pearl Harbor attack. So going all the way back to 1941, the Dow dropped 3.5% the next day because there was an uncertainty there of there was an attack, right? But what could that mean, right? How could that affect the U.S. in general? We don't know because it's uncertain, right? And the market doesn't know. So as a result, that fear comes into the market. People sell, people de-risk, and that's what you get. And again, this reaction is tied to that uncertainty and that fear, with investors typically just rushing to take their money out of equity and move it into potentially treasuries, gold, or maybe even sit in cash just to be more defensive than having that exposure to equity names. If you want to use a modern example, you can go back to the Russia-Ukraine invasion, which some of you probably have been around for. I doubt any of you were around for the Pearl Harbor attack, but the Russia-Ukraine invasion was actually a great example. We saw a brief sell-off, mainly in like energy-sensitive sectors. When Russia invaded Ukraine, that first like week or so, you saw a sell-off in those sectors specifically, and you saw some bearishness come through because of the effect that it could have on the market as a whole. Point number 2 is the war rally. So the phenomenon where the markets typically recover after the initial drop. And we'll talk about this in a little bit. So after the initial panic or whatever happens, you tend to see the market stabilize or calm down or even rally as that uncertainty starts to fade. As I will say once again, the market fears the unknown, right? So now that things are more known, or there might be less fear in the market, you might see some resolution. Yesterday, for example, was a prime example of this. Let's go back real quick and look at yesterday. We'll do a 5-minute chart, and we'll go to yesterday. Here's yesterday's price action, right? Market was rallying. It was doing really good at the open, despite there being an open Israeli and Iranian conflict. Through around this point in the day, we heard reports of Iran looking to bomb a U.S. Navy base in Qatar. They did it. The market sold off. When we learned that Iran notified the U.S. it was going to happen, the U.S. already evacuated everyone, no soldiers were injured. It was basically like them retaliating against us because, hey, you punched me, I'm going to punch you back, and now we're cool kind of thing. The market went broke its previous high and closed at the high of the day because there's no uncertainty now. The Iranians said, hey, you punched us, we punched you back, we're cool now. And that was kind of like, oh, the market went, oh, okay, no uncertainty, we're cool. There's not going to be an escalation here. And that's when we started getting to after hours specifically, a ceasefire conversation. For now. So that's a prime example of a war rally on a very, very small scale. Just looking at yesterday specifically. A older example here I dug up was from one of the Gulf War. And when the Gulf War began, this S&P gained about 17% in 6 weeks because of the U.S.'s swift response, and that showed a lot of confidence. You'll tend to hear investors say buy the war. Once people have an idea of the scope and the potential duration of a conflict. So that fear will leave. The fear of whatever may happen is what drives down prices. And when boots land on the ground, when bombs drop, you've heard these sayings before maybe, and again, the buy the war phrase, that's when the market tends to flip back to bullish from being what could have been bearish. So you might see, especially in this age of social media, people freaking out about like, oh, it's World War III, it's the end of the world, go, oh, we're going to drop bombs. It is just simply noise as it pertains to the stock market. You're here to learn about the stock market. You're not here to hear political opinions. So as it pertains to the stock market, I don't care, you don't care, or you shouldn't care, because once the conflict has some level of either a resolution or it has some level of, like I just said, scope or perceived duration, right? The market doesn't care. It's now less uncertain. It is more certain of what's happening, who hates who, what's happening, and the market just goes, moving on. Point 3. Your defense and aerospace sectors tend to surge. This is kind of obvious, obviously. Conflicts will tend to lead to rising military budgets, defense budgets as a whole. I've spoke about this on a previous stream, but companies like Lockheed Martin, Raytheon, Northrop Grumman, you'll see these names tend to have strong upward momentum, obviously because they'll get more DoD contracts. There tends to be a higher demand for their products because if there's no war, no one needs guns and military. I mean, you might still need them just to say you have guns and military, but they tend to have better profits during this time because people are ordering their products just like any other company. If you want to go back to a recent example, and I like to have these in here so you guys can kind of look back in real time and you can fact check me if you like. After 9/11, when we had like the war on terror, the aerospace sector and the defense sector outperformed the market roughly by 40% from 2001 to 2003. So you can go back and look at most defense names in general in that time tend to overperform. So when you have periods like this where I would argue this conflict isn't as impactful than 9/11 was a big thing, right? I don't think you'll see it outperform the market by 40% by any means, but there could be some outperformance in these kind of defensive or aerospace names for that purpose. Point number 4, commodity spikes, especially in oil. We actually saw this earlier this week, but not to the degree that a lot of people were seeing. So wars tend to cause energy-sensitive reasons to cause oil prices to surge, which can ripple through inflation. It can affect corporate margins. It can do a whole lot. Now, with that being said, the U.S. has been drilling now, and as like U.S. as the country, reliance on Middle East oil has actually dipped pretty significantly over the years. So at this point, in general, it kind of depends on what you're looking at, and I'm not a crude oil trader. Some of you may be. But even when we saw the straight close the other day, or at least threatened to close or whatever happened, it was barely an impact on crude oil prices. So even though that supplies 20% of the world's oil or something like that, because the U.S. has oil, we have our own means to produce oil, it's not as impactful as it may have been in the past. Now, there is a very specific example of this occurring, which I found very interesting because I didn't know about this until I dug into it yesterday. In 1973, during the Yom Kippur War, that triggered OPEC. I'm so used to saying OPEX, OPEC, to cause an oil embargo, which caused oil prices to quadruple in price. I personally did not know that. I knew that we got into a recession or kind of a market slump at that time, but I was not aware of this. So that was something I personally learned while I was doing my research for this segment, which is very interesting, at least in my opinion. The recent example, because like I said, I try to dig up some recent examples for you guys to go back and look at in real time. When we go back to the Russian-Ukraine crisis at about 2022, oil surged above $130 a barrel. So that's your more realistic, real-time example here. What I'll do while I'm talking here, I'll at least move towards, I'll keep the chart there. Anyway, point 5, we're halfway through. Our gold and treasuries tend to rally because they're safe havens for a lot of investors. So when there is uncertainty in the market, we see investors tend to flee towards gold and U.S. treasuries because it is seen as a safe haven over equity. So you got to remember that even as an investor, yourself, myself, everyone, have the ability to park their money in different places. So maybe you park your money in equity because you think, hey, I can get at least over a 5% gain on the year, right? Like this arbitrary number. But why would I do that if there's a risk of losing money when I could park my money at the bank for 4% or 5%, depending on where you're going? So you could just park your money there. You could get a treasury. You could invest in gold. Depending on whatever rates you get for those things, especially since rates are still kind of high right now, could be an attractive means of being defensive but still making more money. During the Iraqi war and the Crimea crisis back in 2014, we noticed that gold prices spiked. And we also noticed that longer dated treasury yields dropped. So you can see some sort of fluctuation here in these, again, defensive instruments, I almost want to say. But this tends to be typical risk-off behavior during uncertain times. You could even look at the last year or two. Gold during the last month or two has been rocketing as well. So these are very, I want to say, obvious things that we see with the market as it pertains to risk-off behavior. Point number 6 is volatility surging. So we talk about the VIX a lot on this program. You guys understand that the VIX is basically the price agreement and disagreement between two sides on SPX options contracts. So obviously when there's a conflict, obviously it doesn't matter if price goes up or down really. When there's more uncertainty, the agreement on where price should widen, right? People are more uncertain. So if they're more uncertain, they don't really agree on where the market should go, where price should be. So you might have the buyer and the seller move wider and wider and wider apart because there's a disagreement on where price should realistically be. You can go back and look at the VIX for any of these sort of conflicts or anything. And anytime, I mean, recently with the tariffs, we saw the VIX pop up to $60 or whatever. So you'll see typically with the VIX, it will sharply spike maybe over a period of 1 to 2 days or whatever. Here, we can look at the daily chart right now on the VIX. But then it tends to cascade down and then kind of grind down lower. Here's your tariff spike. Yeah, we got up to 60.13. Big spike. And then obviously volatility out of whack here. So we're trying to level out something here. So the preceding 3-4 days here, price was still moving down, or price on the VIX, I should say, was still moving down. So VIX was compressing, volatility was compressing. People are starting to agree on price more and more and more. And eventually we grind lower and lower and lower and lower. That's why it's always dangerous to have a VIX long, because VIX tends to decay. UVXY tends to decay. All these volatility names tend to decay over time. Obviously, you can have a volatility long for a short period of time. It can make a lot of money. Like if you had a VIX long or anything like that, UVXY long, prior to the tariff announcement, you can make a ton of money. But you don't want to overstay your welcome being long the VIX in general. Shorting the VIX is always a very good idea, in my opinion. Point 7 are wartime economics that could stimulate certain sectors. So whenever there's war, we've seen in the past that government spending could stimulate industrial production, tech innovation, and employment. How many times in the past have war dug out countries, especially the U.S. even, from a deep depression, from a recession, because now you're employing more people, there's a higher demand for products, there's a higher demand for resources, more money's moving around because that demand is there. Look at World War II, right? GDP soared because of war production. Everyone was working. They needed to produce guns and everything to fight the war, essentially. And stocks boomed when fears just faded, when there was more certainty in the market. And this is pretty typical in general. And that's why there's an old adage out there, and I don't know exactly what it is, but there's an adage about saying like how people die in war to save the economy, and how the number one way to save the economy is going to war. And again, I don't know the adage exactly, but history has shown that every time there's a war, the stock market tends to go up. There tends to be an economic boom of sorts. So we're trading lives for dollars, unfortunately. And I gave that example of World War II specifically, which is really kind of cool here. The Dow rose almost 50% in that 3-year period during World War II, between 1942 and 1945. So this is a prime example of how war can stimulate an economy. Point 8, recession risk varies depending on the scope and the duration of the conflict. So we kind of alluded to this a little bit before, but shorter wars don't tend to cause recessions. I would say if we are actually at a real ceasefire here, that this would be one of those scenarios where it was, I think Trump wanted to call it the 12-day war, right? They don't typically cause a recession in general. They cause that fear, and then the fear subsides and you get a rally. But prolonged wars, so like global wars like World War I, II, or even Vietnam, could impact from a bearish point of view because you can trigger more inflation or debt expansion. Kind of depends. It's very dependent on the war, right? And it can also depress consumer sentiment as well. So that can hurt markets. So this one kind of goes both ways. It kind of depends on the scope and it depends on the duration and where the conflict is, what's actually happening, what's the risk factor there. In general, wars that were longer term tend to lead to longer term interest rate increases, which would be very bad if we got into a war right now. If it was a longer term war, because our rates are already high. We don't want higher rates. That would not be great. Last 2 points here, sector rotation tends to occur. So during these conflicts, we see discretionary sectors, your tech sector, your consumer discretionary sector, and your defensive sector, so utility, healthcare, and energy. We see the money rotate out of those discretionary sectors into the more defensive sectors, which if you watch the program, you know I talk about this quite frequently. So we see money come out of growth and risky names and go into those defensive names. Remember, your utilities aren't going anywhere. You need water, you need electricity. Healthcare, probably not going anywhere. You need to take care of yourself, you need to go to the doctor, whatever, right? Energy, you need electricity to power your house, you need oil to go in your car to places, and defense, which we already talked about, the defensive sector. So these are all sectors and parts of the market that tend to do really well during a conflict because the market will move from a risk-off behavior. And again, that risk-off behavior will be prevalent during the beginning. It's not prevalent towards the end or towards the resolution. When you see the fear in the market, that's when we see the rotate into the defensive sector. So when the fear leaves the market, we see it rotate back in to the growth names, right? So a modern example of this, back in 2022, when we had the Russian-Ukraine crisis, which I use for a lot of examples here because it's the most relevant and recent one that isn't this Iraqi-Iranian conflict, we saw energy and defense stocks move up while we saw tech slump down. So we saw money go out of growth and into more defensive names. Lastly, currency and global trade impacts can shift evaluations from multiple names. So wars can cause a currency volatility in general. Typically, we see a strengthening in the dollar as a safe haven. It's the world reserve currency tends to be, right? So we tend to see a stronger dollar. When we have a stronger dollar, that can do a lot of things. That can hurt equity. So when you typically see dollars move up, or the US dollar go up, we tend to see equities hit bearishly in response. But that can also hurt if you're invested in other companies outside of the US because of the exchange rate. So this is something a lot of people don't think about. I personally don't think about this too frequently because how frequently are we in war, right? And the length of the war obviously matters. But if you're investing in companies overseas via an ADR, or if you're in overseas markets, or really multinational companies like a Pepsi, just coming off the top of my head, FedEx, right? Companies that work worldwide, they could get hurt because they're multinational companies and they pull in currency from other nations. When that currency translates over to USD, they may not be getting as much as they normally would. So that's something you got to watch. If you're investing in like a big conglomerate or any of these companies that are worldwide, they could be affected by a stronger dollar as well, and incidentally report lower earnings unless obviously they raise their prices to commiserate with an increase in USD. So this could also cause some level of a supply chain disruption because companies that are very trade dependent could see some level of disagreement, obviously, with how they're pricing things, as I just alluded to. I guess I'll leave you with this. Those are your 10 points to keep in mind as it pertains to war and its effect on the stock market. In general, markets are going to hate uncertainty more than they hate war. They hate not knowing, right? And once the unknown in the market becomes known, once the market feels more certain, then the markets will tend to stabilize or even rally. So with that being said, if you like this information, you want to see more, feel free to check out my channel, drop a like and a comment, and subscribe if you haven't already. Thanks. Cool, what do you guys think? Hatchet says, economies boom during after wars, in part because the governments print money to pay for the war. Increased money supply pumps the stock market. This is also true. Yes. Very good point. All right, guys. I am parched, so I need to get a water. So I will be right back. Hang out. I will probably be less than like 20 seconds. Man, it is quite a lot to just keep talking and talking and talking and talking. Hopefully you guys like that. Like I said, I was a little peeved because I took time to go back and look at these things and research things. I'm like, oh, I'm going to make a cool segment about war and see how it can be applied to today. Ceasefire. Okay. Yeah, screw me, right? All right, Tesla got stopped out. C'est la vie. That is done. Sorry, just updating the Discord. Cool. Alrighty. Alright, guys. Next segment. Like I said, it's going to be a double dose today. We're going to have a solid day here. Pretty stoked for this next one. I mean, both of them I'm pretty happy with. Let me get that up now. Any thoughts, real quick, just because I know I've got a good amount of people watching. You guys have any thoughts or opinions on any of that war stuff? Did you learn something new, perhaps? Is there something you wanted to add to the conversation? I'd like to hear your guys' opinion, because wars, again, outside of the political aspect of things, from the effect on the stock market, there's a lot that we can dig into in general, and I was trying to water it down to like the 10 key things to look at, but hey, if you guys have opinions, I know like some of you are probably expert traders, some of you are novices. So if you have questions or any opinions, I'd love to hear them on specifically how war affects the stock market. We don't talk politics here unless it's prevalent to money. We talk about money here in the stock market. We don't talk about anything else. I don't care about anything else. That's not the purpose of this conversation. So if you guys want to roll in with any comments there, I'll read them out and we can discuss it. I'll give a minute or two because I know the stream's behind. Till then, SPY pretty flat with basically sitting at its open right now. Nothing too crazy there. We hit that 10 o'clock news drop. Actually, let me get that pulled up. What was it? Consumer confidence, a little bit of a miss. It had a 93. It was expected a 99, so not fantastic. You actually had a sell-off prior to it, which is interesting. Powell actually just said we could see inflation come in not as strong as expected. If that's the case, we would suggest cutting sooner. That more than likely will be bullish. We talked about how we talked about on this program how rates can affect the market in general. I talked about it ad nauseum. But if you're a short-term bull in general, the second we see a rate cut, we should see a hard pop on the market in general. It's something that has been, I think it's 100 out of 100% times when we went from a rising rate environment to a cutting rate environment, at least very short term, there tends to be a pop. So that would be something interesting to see. And it looks like off of those comments from Powell, and a little bit of a bump here in the market. Not too shabby. My 530 0 days are still sitting pretty hardy up here at 774. Pretty stoked about that. Alrighty, no one's got any additional points they want to throw in there about the war. So we will roll into our next segment here momentarily on trading news sensitive markets. Sorry, I really need to drink some water. That dried the hell out of my throat. All right, let me get this set up for you guys and we'll roll right into it. Actually, let's do this real quick. Since I asked you guys twice to stream, I haven't asked you the second time yet, so this will be the second time. If you haven't already, do me one favor. Whether you're at work, at home, trading right now, especially now that it's calmed down in the day, it's 10:21, so you're probably not frantically around the open. Do me a quick favor if you haven't already. Drop a like on the stream, whether you're on YouTube, Instagram, or X. Follow me or subscribe if you haven't already. I told you guys and I made you guys a promise. Once we get to 500 subscribers on YouTube, I will go live every day for the most part. There might be 1 or 2 days I don't go, but I will do way more shows once we get to 500 subscribers on YouTube. So if you haven't subscribed over on YouTube, pop over there. Also, you'll find all segments. So like that segment we just did, I cut out and I upload it. So that way you can always go back and watch it later. And I'll be uploading other content on there as well for your enjoyment, for your educational purposes. So if you haven't, please subscribe over to the YouTube channel. Follow me on X for updates as well. And my Instagram, I honestly, if you're watching on Instagram, the few of you that are, I do neglect it. So I'm going to try to not neglect my friends over on Instagram. So if you're watching right now on Instagram, follow me on X at Atomcash, because I should be better about Instagram, but it is a much smaller audience. So I will try to be better about that. Hatchet says, would be interesting / unusual to have a cut where market may be at all-time high. If your SAR break please plays out. I agree, man. That would be very interesting. How the timing would line up there would be pretty cool. Especially if we break it today, we continue up in next meeting. So even if we just kind of grind up in the next meeting we get cut for a hard pop, that'd be cool. I wouldn't be mad at that. The timing would work out beautifully if that did happen. Anyway, let me take one more sip of water. Not sponsored by Bowler. Maybe one day. What a weird sponsorship. Like, oh yeah, what do you do? Oh, I trade stocks. Oh, cool. We've been looking for someone to sponsor our seltzer water. Okay. I'll take it. Polar's a good brand. Anyway, let's get into trading news sensitive markets. So you may be wondering, how do I trade a news sensitive market? And that's why I'm here to help you. Now, as of current day, right now, it's 6/24/2025. We've had a very news sensitive market with the Israeli and Iranian, I should say, conflict that we've been seeing. The market's been very sensitive to both headlines from the Fed as well as headlines from Trump just tweeting and from Iranian and Israeli governments. We've been seeing the market react violently to these things. So you may be thinking to yourself, man, the market may be kind of hard right now. How do I navigate it? And that's why I'm here to help you navigate a news sensitive market. Now, let's start off with one thing. Let's identify what kind of person you are. What kind of trader are you? Are you an intraday trader? Are you a swing trader? Are you an investor? Starting with that mindset is going to kind of give you a better idea of how to trade a news sensitive market. Now, keep in mind, you could be all of these things at once, of course, but depending on your time frame is obviously going to affect your risk. And that's the first thing I want to talk about is how risk plays into a news sensitive market. Before you take any trades, you want to make sure in general that you're assessing your risk. What's your risk to return ratio? What are the odds of something happening when you take a trade? And as it pertains specifically when you're trading a news sensitive market, you have to understand that, especially if you're trading short-term time frames like 0 DTEs or weekly contracts, that one tweet, one news event, one something coming out at one time could kill your position like that. Could go either way, whatever can happen. So you have to take that into account when you're trading shorter term. So if you're trading shorter term, let's say you typically trade $1,000 on a trade, right? Maybe because you're only risking, let's say you trade $1,000 and you tend to have a 10% drawdown before you cut your position. So you risk $100 loss, right? Maybe in a new sensitive market, you instead move to a $200 position and you risk a 50% drawdown. Now, why would you do that? Well, you risk the same dollar loss. You're still risking $100 loss, but you're giving yourself more breathing room. You have a 50% drawdown there. Now, you don't even have to take that full drawdown, that full loss, but you're still allowing yourself that flexibility. Now, obviously, the limiting factor here is you'll make less money, but there are many times where you're going to want to hit the gas and hit the brakes. And in a new sensitive environment, I would challenge you to consider hitting the brakes by adjusting your dollar risk specifically to give you more breathing room. Now, keep in mind this point as well. That same $200 position, while it's not $1,000, you will make less money theoretically, but that volatility could actually work in your favor. Those news events that could kill your position like that, like I just said, can also make your position incredibly more, it could work out even better just like that, just as well. You could make more money even faster than you normally would, right? So that risk goes both ways. So because the risk is higher, the reward is also higher. So you don't have to take as much of a dollar risk in a new sensitive environment simply because of the fact that the risk of making money is higher and the risk of losing money is also higher. So you can use a smaller dollar amount and still make a big amount of money while not risking any more dollar loss than you normally would. Hopefully that makes sense. Now, specifically when we're looking at the news, you want to hunt for bearish news. And it's not because you want to be a bear. And at least this is my personal thesis. You could do whatever you want. But I like to tell people, or the phrase I like to use is a bear catalyst is a bull catalyst waiting to happen. Every single time there's something bearish that goes on in the world, it resolves bullishly. Think of it this way. Every time something bad has ever happened and the stock market has reacted negatively, what has the stock market done? Here, I'll give you a quick little, here's the SPY right now. We'll put it on the monthly chart, take away all my doodles. What's the market done? Every time there's been anything bearish, which way does the market go? Yes, it goes down, obviously, but eventually it goes up and it goes higher because all those bear catalysts resolve. They all turn into bull catalysts eventually, whether it's a war, a conflict, a bombing, the terroristic act, all these things eventually resolve. Bearish headlines tend to be headlines of uncertainty. There tends to be things that the market feels questionable about. It doesn't know what's going to happen next, so there could be more of a drawback, more of a drawdown because of the fear that is in the market at that point in time and the fear that things could get worse. That is when you hunt for bull opportunity because eventually, and you could even look at the recent thing with tariffs. On the SPY, we got all the way down to 480.38. No less than 1 month later, the market hit 593.78, increase of over 100 points within a 1 month period of time. Technically 2 if you go from the beginning to the end. But you get my point here, that anytime there's high fear in the market, it will resolve. Anytime you see something bad, people bombing, killing each other, again, terroristic acts, whatever could be really bad, there will be that short-term bear catalyst. There will be bad things, especially in a news-heavy environment where there could be an active catalyst where a war going on or something like that. But once that resolves itself, you'll see a bullish reaction. Now, I want to show you a specific example that we saw as early as yesterday on the SPY. And I spoke about this earlier in the stream, but I'm going to speak about it once again here. We actually saw a decent rally on the SPY move up to the upside. Around this point in the day, around like 11-ish, we received word through news blotters and whatnot that Iran was looking to attack a U.S. airbase on Qatar. Now, we, prior days, just giving some context here, attacked Iran and dropped some bombs and trying to target some of their nuclear facilities. Now, since then, it's been a day or two, however long it may have been, the market rallied on this day. This is yesterday. And we received news at that point in time that Iran was looking to bomb this U.S. airbase. Consequently, the market sold off very bad. It sold off because the fear was there. Oh, what's going to happen next? We were just attacked, blah, 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 right? As that information resolved in real time, we saw on the day a hard push to the upside and rally and even break and close at the high a day because we learned that Iran told the U.S. that they were going to attack and no U.S. lives were even lost. Effectively, and I mentioned this prior on the stream, it was the equivalent of, hey, you punched us, so we're going to punch you back, and now we're cool, right? Like, oh, you hit me, I get a free one, and now we're good. That was the equivalent of this action. So that was the resolution I'm talking about. The bear fear that you're seeing in real time on the chart here. The fear that something could get worse or it could be more exaggerated. Things, oh, what if they drop a nuke? Whatever happens, oh, sell everything. And then the resolution of seeing, oh, it was just, you punched us, we're punching you back. Oh, okay, things are cool now. In fact, things are better than they were earlier in the day. Things are even better because now we feel better that we're not going to get bombed again. So the market resolves even more bullishly. And that's the main thing to look for when you're looking at conflicts in general. Let's pull it back here. So as it pertains to creating a new sensitive market, I would not worry about being a bear. A lot of people find a lot of allure in being a bear because being a bear, you typically get stronger, harder moves to the downside and you can make a lot of money when you're correct. However, being a bear is very tactful. You have to be very timely when you're a bear. There's less flexibility when you're being a bear. And again, you're working against a few things. Keep in mind, the market statistically will always go up. Whenever there's a underperforming name, especially in the S&P 500, it will be removed from the S&P 500 and a new performing name will be plugged in. It is the top 500 performing companies. So yes, there may be periods that the top 500 performing companies lag, but they will always make more money because even if one or two companies, three companies, four companies, however, fall out of the S&P 500, guess what? The next up-and-comers plugged in and they'll continue rallying. So don't worry about being a bear in general. I would challenge you to be more of an opportunist. Now, if you hit the bear move, God bless. There will be times where you'll take them. I take bear moves all the time on the indexes, and I'm very peculiar when I take those moves. However, I'm more interested in being a longer-term bull because I know the wind is at my back, as I like to say. Think of it this way, and let me challenge you on something here. If you think that being a bull and being a bear are the same things, you're wrong. It's not just betting on the market going up. It's not just betting on the market going down. There's one added benefit that bulls have that bears do not. Bulls have the ability of not having margin. And obviously you can borrow on margin. But what I mean, margin to short. When you short a company, you have to borrow the stock and you're paying money as you're shorting because you're borrowing the stock to short it. Consequently, it is more expensive to short. And you can lose more than your initial investment when you short. So the risk is also higher. So as things move up, and I'm sure a lot of you watching this will know what a short squeeze is, but as things resolve and the market moves up, there is more wind at your back, more fuel for the bulls because shorts are going to be forced to close their short position because not only are they upside down on their trade, but they're still borrowing money to be upside down on your trade. Imagine this. You spend $100 on a trade and you lose $150. Longs don't have to worry about that. Bulls don't have to worry about that. You spend all your money. The most you can lose is all your money. You're short. You spend all your money. You can go into debt. So there's always wind at the bull's back. Always. That's why I say don't worry about being a bear. Focus on being an opportunist and looking for those awesome risk to reward areas in the market in general when you're trading a new sensitive environment. Yesterday was a great example of that. And I did it live in our Discord at Exclusive Trading where I had a long open on the Qs and today it's still open. And I opened this 530 call on the Qs, which is now a 0-day option, but it was a 1 DTE for today. And I opened at 162. I believe it was 162. It is now trading at 767. And I even held it through yesterday's drama because I was very, very confident it would resolve. I opened it up somewhere around here. I held it through the bunker attack thing, and I had a very high confidence we would resolve to the upside, and we did. Now, there's other factors at play there, but the point I'm trying to make is this. I was looking for the bull opportunity. Of course, you could have made money as a bear. Of course, you could have bought puts as a bear, but the hard part is, especially about being a bear, if you're not timely, you can get wrecked pretty bad. Mainly because if you see the market selling off at, oh, I'm going to flip to bear, I'm going to buy puts, and you buy puts maybe here at like 530 or whatever this is on the 526 on the Qs, and you don't close out because you think it's just going to keep going down, and in a period of 5 or 10 minutes, you're now underwater because you're IV cooled and a whole other kettle of fish with options trading. Or if you're short equity, you could also have a really bad time because you don't have the opportunity to close out before it pops back to the upside. So now instead of making money, you've lost more money than you were even initially put in. So that's why I would challenge you if you're trading a new sensitive market to look to be an opportunist and look for those bear moves that are coming and look for the opportunity, whether you're using technicals or other things, to keep you in the loop for being more of a bull than a bear. I would, in addition to that, look for overreactions that have solid risk to reward, because there are times like yesterday's drop where the risk to reward was very favorable in this case, and you could see in real time still. Again, these contracts are now 0-day options. They're $7, almost $8 in the money right now. The risk reward was fantastic because I had high confidence that we would be around at least 530 yesterday, intraday, right? We would return, and at the end of the day, we closed at 532.17. So fantastic. But I swung a position overnight because I had high confidence that we could see a continuation and probably some sort of resolution. I wasn't saying I'm predicting a ceasefire, but I was more or less predicting that the market would still resolve to the upside because those war fears tempered, or the expectation was met. We have a scope. We understand what is going on in the world now, and those fears will come out of the market. So I was expecting that to happen and seeing a continued upside move, and here we are today. So that's why I would really challenge you to look for those overreactions that have solid risk to reward, or it's worth taking a stab at. Like I said, $1.62 a contract, now trading at $8 essentially. Now, the last thing I'll leave you with when you're trading a new sensitive market, depending on if you're on the buy side, and this pertains to options, if you're on the buy side or the sell side, there's two different things. You want to be mindful of your premiums. So in a new sensitive environment, if you're buying at a time where there's a big bop or a big drop, you could see higher premiums. There's two schools of thought with this. If you're a buyer, you're expecting premiums, or you're expecting IV to continue to increase. So you have to be very on top of that. But I would challenge you to think on the sell side of things and look to sell contracts. Now, let's say you don't like that idea. How you can minimize the volatility risk if you're on the buy side of contracts is to look to buy contracts with more time. Unless, again, you're looking to play that IV move. So instead of buying, maybe buy a weekly contract normally, maybe buy 2 weeks out, 3 weeks out. Buy yourself a little bit more time, because those longer dated contracts are less affected by IV. Now, they're going to cost more, but they're going to de-risk you if you want to take the buy side of an options trade. Now, if you want to take the sell side of the options trade and maybe sell puts or calls, look to take a short dated contract and take advantage of that IV pop, because now that the IV is higher, people are going to be paying more money, like we just spoke about, for these options contracts. Consequently, if they're paying more money for these options contract, guess what you get as a seller? You get paid more money. So you win both ways. So I would say if you're on the buy side, look to buy more time unless you're playing an IV pop or looking for an increase in IV specifically. And if you're on the sell side of things, look to sell shorter dated contracts to take advantage of that IV, that high IV options premium that will give you a little bit more money in your coffers. And I'll leave you guys with this. In general, when you're trading news sensitive markets, you want to understand that the market is always going to fear the unknown. It's always going to feel uncertain and fear the unknown. You see a lot of bearishness come into the market when the market doesn't know what's going to happen next. When the market knows what's going to happen next, and like I said before, a bear catalyst will always resolve and a bull catalyst, it will always be waiting to happen. That's when the markets will always stabilize and rally from there. So this is how you guys can learn how to trade a new sensitive market. And if you like this video, do me a favor and drop a like and a comment down below on what you think. And don't forget to subscribe. All right, guys. What do you think? Pretty good? Pretty stoked? I know it was a little redundant with the previous segment, but I think that was it's pretty solid. Oh, what a kind of boring day. I'm glad we had these two more in-depth segments. The market said I'll go into snooze mode today. Not much to see here, unfortunately. Pretty dull day. Hey, but hey, we got a nice Tesla trade-off. Nice 17% gain there. Pretty solid. Pretty proud of that. Went over 2 segments. I thought we had good educational content on there. Pretty happy with that. Pretty stoked with today. Now, again, I crammed in Thursday's session into today. I wanted to keep them separate, but because of the whole ceasefire thing, I thought it'd be more prevalent to put them in one segment for you guys today, or put them on one show. And as of right now, I'm not planning on doing another stream this week, but I might do a surprise stream at some point. So if you're not following me on X, make sure you're following me on X, because that's where I'll make the announcement if I do a stream later this week or not. I will zoom through things real quick. That way I can give you guys what to expect, at least looking at the market for the rest of the day. and then I will send you all on your way. Be mindful that Powell is still speaking right now. He's testifying, I don't know for how long, but he's still speaking right now. So just be mindful of that. If you do decide to open up any trades, the market may be waiting for him to stop speaking. So that could be, remember, we just had this whole thing on uncertainty. That might be why we're kind of seeing like kind of a muted market here. Could be. I will say that we did see a rally off him saying some things a little earlier today as well. So don't know. Q sitting at the highs, SPY hugging this tight LOI, the 605.02. I will remind you all to put this line on your chart. The 605.95 is your monthly SAR. Breaking that monthly SAR will lead, and if you don't believe me, you can go back and watch the beginning of the program. With the exception of that one screw up I had, will lead to at least a 70-point climb. I think on average it's a 40% increase in general. What would 40% be right now? 605.95 times 40. Let's see. 242. So if we saw a 40% increase in SPY after that SAR break, 848.33. Whoo! Can you imagine? Will we see will we see SPY 1000 by 2027? It's possible. Let's look around real quick. Q's new high a day. IWM, beautiful reversal on IWM. Solid. Broke that top line LOI. Next price you want to keep an eye on. These two areas are actually pretty key for IWM, especially intraday. 215.18 and 216.21. That's your 0.618 retracement. Watch those two levels today for a reaction specifically. Volatility, VIX grinding lower, actually almost at the low a day here, so watch for a break to the downside even more. Your UVXY is at low a day. NVIDIA looking like it could push again. That number on NVIDIA again, 149.77. That's my next bull target. Breaking over that, we could see a new all-time high very soon. Apple is decided to stop eating as much glue and is trying to get a rally here. It doesn't look very strong, though. I'd be cautious on Apple if you're a bull. Microsoft, similar story there. Google actually at highs, trying to break out of its slump on the day. Amazon looking a little slumpy. All right, so we're not seeing a ton of strength, and Tesla down too. We're not seeing a ton of strength through our Mag 6, which is interesting, but we are seeing, I love this chart on IWM. I'm loving this move here. About $2 off the lows here on IWM, so it's really nice to see. If we do see the Mag 6 turnaround, it's nice to see that the Qs are basically sitting at high a day right now with, I would argue, Apple slacking, Microsoft slacking, Google slacking, Amazon slacking, Tesla slacking. NVIDIA's retraced, but it's pushing here. So if we see these names start to get a rally here, so get some strength into it, could have a pretty explosive move to the upside here, specifically on the Qs. That 540.01 could come today. That would be pretty cool. That actually would make a new all-time high today. So after dividends were taken out, that old all-time high, after dividends, 539.40. So that would be interesting to see if we can crack that today. Interesting. All right, guys, I'm going to leave you guys with that. I thought we had a lot of good things to talk about. Keep an eye if you'd like those segments today. I will be uploading them to the channel at a later point in time. I'll probably upload one today and one later this week just to space them out a little bit. Again, no other shows scheduled for this week at this point in time, but if you are not following me on X, please go ahead and do that. It's at Atomcash, ATOMCSH. Follow me on there, and you'll get all my live updates for when shows are coming out. That way you like, and if you can, if you'd like to attend, you can, of course. And some will say that you may need a niche to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys, and remember, precision beats prediction every damn time. Take care, guys. I'll see you next time.
The time has passed, and that's a wrap. You're on with